Today, the first Solana futures ETF hit markets. President Trump addresses the Digital Asset Summit in New York City. And Michael Anderson of Framework Ventures discusses recent regulatory advancements for crypto in the US and what they mean for the industry. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Major cryptocurrencies heading lower this morning after the Federal Reserve kept interest rates unchanged on Wednesday, while indicating that reductions are likely in store for later in the year. As of noon Eastern, Bitcoin remained pretty much flat, trading above $84,600. That's after breaking through the $86,000 level this morning. Solana dropped more than 2.5% as the first Solana futures ETF hit markets today. The new ETF, launched by Volatility Shares, comes as issuers await SEC decisions on spot Solana ETFs. Meanwhile, the XRP token fell more than 4.5% the day after the company's CEO Brad Garlinghouse announced the SEC is dropping its case against the company after more than 4 years. Immediately following the announcement, XRP soared with the token climbing 14% as of noon yesterday. The development comes as the SEC moves quickly to reverse much of the enforcement action taken against the crypto industry by the previous administration. That includes ending cases against several crypto companies, including Coinbase, scaling back its crypto enforcement unit, and declaring most meme coins are not securities. Tomorrow, the newly formed SEC Crypto Task Force will kick off a roundtable series. The first one will focus on defining the security status of digital assets. Okay, let's talk about some of the other top stories. President Trump addressed attendees of the Digital Asset Summit this morning, saying that America is now poised to become the crypto capital of the world. It was the first time a sitting president addressed a crypto conference. In a video message, the president touted his recent moves related to crypto, including his executive order creating a strategic Bitcoin reserve. The order, signed earlier this month, also established a U.S. digital asset stockpile managed by the Treasury Department, which holds other confiscated cryptocurrencies. The president said that the move would allow the federal government to maximize the value of its holdings instead of, quote, foolishly selling them for a fraction of their long-term value. He went on to say that his administration is ending what he called the last administration's regulatory war on crypto, adding that he has urged Congress to pass landmark legislation which would create simple, common-sense rules for stablecoins and market structure.
With the right legal framework, institutions large and small will be liberated to invest, innovate, and take part in one of the most exciting technological revolutions in modern history. It's so big, it's, I think, as big as you can get. Pioneers like you will be able to improve our banking and payment system and promote greater privacy, safety, security, and wealth for American consumers and businesses alike. You will unleash an explosion of economic growth, and with the dollar-backed stablecoins, you'll help expand the dominance of the U.S. dollar, and many, many years to come, it'll be at the top, and that's where we want to keep it. We only want to keep it at the top, always.
Next, South Korean prosecutors are investigating local crypto exchange Bithumb. That's according to the outlet YTN, which today reported that the exchange allegedly provided company money to its former CEO and current advisor to purchase an apartment. The report says its headquarters in Seoul was searched in connection to the alleged $2 million embezzlement. We reached out to Bithumb but didn't hear back right away. However, according to a different local news outlet, a Bithumb representative confirmed some of the allegations and said that the former CEO returned all the money he had borrowed. Last, a new survey reveals institutional investors are increasingly bullish on crypto, with the vast majority planning to amp up allocations in 2025. This research out this week from Coinbase and EY Parthenon found that 83% of the 352 firms surveyed plan to increase their exposure to crypto this year. The survey found that increased investor interest is partly driven by the belief that more regulatory clarity will be the catalyst that unlocks a new wave of opportunities in the space, especially as it pertains to custody. On the flip side, the currently vague regulatory landscape is considered one of the main challenges facing the industry. A significant majority of surveyed investors said they plan to allocate more than 5% of their assets under management to crypto this year. The global survey was conducted in January and notes that nearly 3/4 of firms already hold cryptocurrencies other than Bitcoin and Ether, with XRP and Solana being the most popular. All right, turning to crypto venture capital for our main story, Crypto World's Tanea McKeel sat down with Michael Anderson, the co-founder of Framework Ventures, while he was in New York City for the Digital Asset Summit to discuss what his firm is currently paying attention to. He also weighed in on recent regulatory advancements for digital assets in the US.
You are in town for the Digital Asset Conference. What brings you to the event and how's it going so far?
Well, thanks for having me. Yeah, we've attended a couple of DASs before. I think this is the first one that we've been to that's in New York. Very excited to have it back in the US. I think last year it was in London. Yeah, we're excited to see the institutional support. I think that's kind of the narrative of what we're seeing the most from this event. And all the institutions are here, they're making announcements, and we're excited to see it.
And we're not even halfway through the event at the time of this interview, but what is the vibe that you're feeling so far? Because we are kind of in this funny place in the market where we have all these regulatory tailwinds, a lot of positive stuff to look forward to, but when you look at the prices, and I know that does not matter depending on who you ask, but we are in kind of an awkward place where it's headwinds versus macro tailwinds. What's the vibe like from what you can see?
Yeah, I think the best description that we've come up with is it's kind of a tale of two cities going on right now. You've got all the positive movements on the regulatory and policy front. I think some of the regulators are announcing even today, the dropping of previous cases or dismissing of cases. You've got the policies front really moving forward. There's the Genius Act, which is working its way through the Senate right now, which is the stablecoin market structure bill. And yeah, the market itself seems to be in a different place. Positive sentiment on everything that I consider to be substantive, but it's tough to see the markets this way. And if it was any other market, I think it would be positive reactions with all the stuff going on underneath.
Let me double click on the Genius Act because I think we're both really into stablecoins right now. What do you make of kind of the state of that legislation right now? I've been talking to a lot of people about it, and there are some parties that have their criticisms of it. And I think we're also in this place where we're so new still in this new regulatory environment that for many people, it's like, let's just get something passed and we can deal with it later. Anything we get passed is positive for the space. What are your feelings toward the legislation?
Yes, there's a couple of thoughts there. I think broadly speaking, what the industry is looking for is market structure. Being able to have, whether it's market structure for the stablecoins, which is the Genius Act, or hopefully something that's upcoming, which would be market structure for basically all other assets within crypto. But what the Genius Act I think is great is providing kind of I would say a middle of the fairway approach to how it does regulation. It provides a framework for how you can be a US issuer or interact with US issued stablecoins. But it also doesn't, it basically says if you're not based in the US, there's other frameworks that exist. There's MiCA in the EU and potentially others that come up eventually. And it isn't going to say everybody else has to abide by our rules as well. And I think that this is the benefit of the way that it's structured to say, if we recognize those other frameworks that exist in other jurisdictions, we're going to be able to also interact with those stablecoins as well. The truth of the matter is most of the issuers of stablecoins actually exist outside the US. There's about 220 billion of stablecoins. Tether is about 160. USDS, which is made by Maker, is about 8 or 9 billion. USDC is made by Circle, which is based in the US. And really what we want ultimately is there to be a competitive landscape for all the different issuers and potentially new issuers that come up as well. And so we want there to be a competitive landscape and we want it to be open, but we also want to know what the rules are. And so that's why we're excited.
What's your feeling about timeline? I feel like we're in this funny place where we're coming down from the post-election high and the post-inauguration high. We saw the SEC kind of drop a lot of the investigations and now lawsuits. We've had just announcement after announcement after announcement, and now we're just kind of settling. And it feels like we've lost some of that feeling of euphoria.
Yep.
But what, I guess, is your feeling about timeline for stablecoin legislation actually getting passed in a way that is meaningful and allows companies to actually do something beyond wait around?
Yeah, it's a great question. I think crypto, especially people in crypto, because it's 24/7 markets, timelines are not necessarily the best understood or recognized. And everybody wants everything immediately. And I think generally what we are expecting is that in the next few months, we'll probably have the final draft. It's been through committee within the Senate, has to get voted on in the Senate, it has to get voted on in the House, and then signed by the president. The expectations are that this will be a standalone bill. It probably won't get put into another, reconciliation or some other type of bill. The hope is that we can have this bill solidified by the middle of the year. So probably a few months away. But then we're also looking forward to, like I mentioned, the market structure bill, which is for every other asset. What's a commodity? What's a security? Who's the regulator in charge? How does something become sufficiently decentralized? A lot of I think the basic building blocks of what FIT from last year I think will get put into the market structure bill that we would hope to come through maybe in the second half of this year. And so that'll be the next, kind of thing that we're looking forward to and working towards. Once we have all of those things in place, I think that's where the industry can kind of say, okay, now we have the rules of the road. It's time for us to go off and operate. And I think that's kind of where we'll probably see the most positive signals. I mean, these are the most seminal pieces of legislation for this industry ever. And yeah, there'll be big moments.
So fast forward a little bit, say we get that legislation and everyone is ready to run. What does the outlook of the stablecoin landscape look like to you at that point? Like you said, a lot of stablecoin issuers are offshore. And then even here, we have so many people hinting or outright saying that they're going to get into the stablecoin game, be it Stripe and everything up to Bank of America.
Right.
So what does that do for the landscape?
Yeah, well, so Stripe bought Bridge last year. I think that was kind of a recognition. It was $1 billion acquisition. I think it was recognition of them seeing this as a strategic opportunity for them to get into the stablecoin business this year. I think the more regulated institutions, Stripe's not a publicly traded company yet, more regulated institutions like Bank of America, they need to know what these rules are for them to operate. And so I think that's the gating item for them to launch, Bank of America coin or maybe JP Morgan coin. I think those will probably happen pretty quickly once there's clarity. And from there, I think, we're probably going to see more companies make announcements that you wouldn't necessarily see. I think when we think about stablecoins as a new business model, you can take a lot of the financial service infrastructure or companies that are building financial services, replace them with stablecoins and kind of do it in a better way. And we're starting to see insurance companies, payroll companies, all types of kind of fintechs are looking at stablecoins as a strategic imperative, not just kind of a new interesting technology to play around with. It's going to be core to a lot of what these companies are doing.
Well, I know this conversation has largely been focused on stables, but what are you looking at when you're looking at your next investment or the next project that you want to put some money behind? What is interesting and important to you right now?
Well, stablecoins is a huge focus of ours, not just in the issuers themselves, but the infrastructure providers, the blockchains that they run on. We're also looking at a number of companies, like I mentioned, fintech-style businesses that are looking at stablecoins as an advantage in competition with incumbents. The other stuff that we are really excited about is energy, and being able to build an energy ecosystem, whether it's on the power generation side, the power storage side, or even the transfer of physical assets related to energy. There's a lot of different angles to it, but energy and stablecoins are primarily our focus right now.
Okay, that's all for Crypto World today. We're back again tomorrow, and we will see you then.